Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And here we are now on the last trading day of February. It's the 28th, 2019. I'm recording this just after 3:20. The stock indices have closed. You're looking at where the settlements will come in. Remember, they reopen at 3:30 to 4 o'clock, but the settlement price is determined at 3:15. So that's your settlement. You're pretty close to where the metal market settled as well. So what's going on? Well, the market's in a stall frame. We have been pointing out, and I'll do it again today, that we got up to important levels where we had resistance before, and I'm talking from the December break low. We've had a heck of a run to the upside, and nothing goes forever without either consolidation or deciding that it can already make its move. I'll leave that up to you. I saw a lot of analysts today saying, you know, these markets got up to their 200-day moving average of closes. The fact that they're hanging there is bullish for the next leg of the market. I can accept that. I've heard them say, others, we're consolidating. You've had such a big run-up. Maybe this is where the market corrects. I can accept that from others. So where do you go? I've got something in my eye there. Let's go to the charts and see what they're telling us. You can't get away from the fact that from Christmas Eve, and that's where we were, even though this is a weekly chart, this market just soared even through old resistance points. That's pretty impressive on the market. In fact, I got to tell you, for a year, that's about a 12% move. You'd love that for your portfolio, right? So the question is, what does the market do for the second part? And we're not in the second part. We're in February. What do we do the rest of the year? That will become one of the questions. When you look at a daily bar chart, I think you'd agree this market has really moved itself up and away, and it's just started going somewhat sideways right here. In terms of the swing lines, and this is the same chart, just with a swing line, you've got the pattern of higher lows, higher highs. Should the market take out 2775, what happens with the market is you start making then a pattern of lower highs, lower lows. So the bulls want to defend this pattern. It's done them very well since this market's been coming up, and that's an unusual pattern. Here is the 200-day moving average, and some of the analysts are saying now that you've spent about 2 weeks either against it or slightly over it, that becomes supportive. I can't deny that. I agree with them. I see the combination of support at 2757 to 2756. The 18-day average of close in red and the gray is that number. When I go to the next chart and I look at Bollinger Bands, which are these bands up here, we haven't hit a lower Bollinger Band since the end of 2018. We have hit the upper Bollinger Band on a couple of occasions, and the market seems to just be laying here right now waiting for some next event. In terms of momentum, as long as the two numbers here, the red and the blue, stay over 80, I am in the bull camp. So I am telling people, yes, I still see the pros buying the market, but the moment you lose that red line, I think the market gets into more corrective action, setting up at least a challenge of that 18-day average. We are not yet there. It's that simple. In the NASDAQ, the battleground has been the 200, but unlike the S&P, you're not staying over that number. This is a number that rallied up to that long-term average, and it's fighting itself there. And if I step back here, you can see these were old highs back here and into this area here. So we are in an area where the market it's logical to stall. You still have the bullish embedded reading with both numbers over 80. I have no reason not to be friendly to the market. In the Dow Jones, both numbers are over 80, but they're starting to slant. This market cannot afford much of a break. If it gets it, the odds favor then that the red line turns under 80. The pattern would become one of lower highs, lower lows, putting into place a challenge of the 18-day average of closes. That doesn't mean challenging it takes away all the bullishness, but it takes away that leg of it if it occurs. Has it occurred? It has not. And notice the 200-day average is way under the market, unlike the others, so it's really spent a serious amount of time over it. That's one of the things those TV analysts are talking about. The Russell's problematic, and if you get my written reports, I wrote that. I said, you know, what's bothering me is this market's losing that upside momentum. It's the first one doing it. All it did is rally to that 200-day average in the Bollinger Band, and it sort of just fizzled out. If the market takes out Wednesday's low, you'll end up with a pattern of lower highs, lower lows, putting into play that 18-day average. It's not that far away. It's 30 points away, but you've already lost the embedded reading. When you lose an embedded reading, the only time it can come back is the very next day. So this market has to show immediate strength to keep that. When it opens tonight, the odds favor it's going to lose that reading even more. So it needs a pretty good reversal. Not getting it, I think, puts 1552 into play in the market. In the VIX, notice how you've just flattened out. So this huge rally we had has come back down, and similar to other years that we've had recently, starting to go flat between, let's call it the 1650 level and the 1370 level, and it's the 18-day average that seems to hold it back each time. You have divergence. You have momentum pointing up. You've got the swing lines pointing down, and the market's trying to stay underneath the 18-day average of closes, which gives it a bearish bias. When I come to the T-bond market, what I said the past 2 days, I'm staying with. I realize people are all saying about the balance sheet, well, from what the Fed said, that's good. I don't know. I look at a market that's broken out and trying to break out to the downside. This is that classic sideways action. We have had a neat rally in these bonds and notes since Christmas. The question is it run its course? And that's what some people will ask. Are we trending here? We're not. That's the good news. You have a higher high, lower low. You have failed on runs to the upper Bollinger Band on sideways action. This is your first test of the lower band. Whenever you test a lower band, and the word isn't whenever, it's often, real often, you'll get into oversold territory unless you embed. So you're down here, you're into the oversold territory. I think pros took some money off the table on the short side today. The 18-day average might be a resistance point. In the 10-year notes, momentum is down. You hit the lower band, same pattern, sideways action, churning market, not trending. Churning market. You get churning markets, pivot points work better in them than trying to sit there with a trend often. Where you are trending is TLT. It's leading the pack with lower highs, lower lows, went down to the lower Bollinger Band. It's trying to break out of this action to the downside. Now, it is oversold, and it's typical to get oversold when you're trying to do a breakout. So I do think pros took money off the table today. But if this market starts adding and pushing down, be careful. The 100-day average could come into play on that. In the dollar index, this was a classic cover short day. Here is a market that's been working its way down. By the way, it got up to what we call an important point here on that 9,700 level, and it couldn't add to prior gains that it had. It acts like a market that made a major top. Then it starts down, starts challenging the 100-day average the past 2 trading sessions, not including today in oversold territory. Often you get that third surge if the Bollinger Band's near it. The question is, will it make the run? I won't know. What I would say is you got support at that number, resistance at the 18-day. The market came down today, hit the lower band. I'm still going to say resistance up here and oversold. I think pros took some money off the table in the dollar index. In the euro currency, notice there's no real follow through to the upside. You're overbought. Today's break low was 113.74.5. Yesterday's break low is 113.80. So we have an outside day down where the market closed at the end of the day over the 18-day average. You've taken the market out of the uptrend, but you haven't put it in a downtrend. It's sort of stuck now against that 18-day average with 2 resistance points above it. In the British pound, you've been over the upper Bollinger Band, and now you're backing off a little bit. I don't think anybody knows what's going on in this market in terms of the politics of what's going on. The chart's a chart. You've been in an uptrend, but every day you wake up, it's like going through a major report. I don't think it's the place to be until they know what they're doing there. In the Japanese yen, we had a fake out. The market loses its embedded reading. When you lose an embedded reading, you often make a run to the 18-day average unless you re-embed the next day. That's the only time you can re-embed. You look what the market did. Got itself up and Believe it or not, it's re-embedded itself, and now it's punishing if you didn't get out. You had one opportunity if you were playing that contra trend, and now you're back to the lower Bollinger Band in an embedded situation. Still what we'll call, because of momentum, a bearish chart. That's how I'm viewing it. Bitcoin made its way back yesterday to its 18-day average, that line in the sand, just sitting now. It's got a higher high, a lower low. I call it not trending. In WTI versus the Brent, well, the Brent has all of a sudden fallen back to this 18-day moving average of closes. So it's given up from $9.73, about $1 of its premium that it had. If you take a look at the chart, you're overbought as can be. You've got a pattern of lower highs, lower lows over the 18-day average. Bias is up, swing line down, and you're overbought. That's a mess. When I come to the April crude, I got the same thing. I'm overbought. I do have an uptrend still at work, so it's a more solid chart, if you will, than the Brent right here, but you're in a pretty good resistance area between the 100-day and the upper Bollinger Band, and you are overbought. In gasoline, the market had lost its embedded reading. Now, let's go back a day or two. Right here it lost it. Comes back and gains it. That's helping the market, and you're trying to hold on. But the 100-day average is the resistance. I look for support if it breaks close to that 18-day average of closes. And gasoline's one of those markets that as you get closer to spring, I always think prices going up, not down. In natural gas, tell me what the weather is, and that's how you play it this time of the year. This market is still very much in an uptrend. Resistance at the upper Bollinger Band. I think the pros were taking money off the table against that number today. So, you know, you heard me talk about pivot points, and I look at them during the day because as I'm writing my reports or I'm getting ready to do my 8:30 subscriber video, sometimes I'll bring up these points and show you why I'm looking for what I am. And what they are is they are a formula that's been around for a long time, where you're looking at the days range and then you're figuring out from that the formula it'll help you figure out where the market's at in terms of points. So you're taking the previous day's high, low, close, you're going to add them, then start dividing, and all of a sudden you get points above a market, points below. It's always the same formula. The center line's right here. That's your neutral point. But often traders are looking to go short against that number, trying to come out against it, or buying against the blue lines, trying to come out at the white lines against it. I've also created a 3-part series because I add, first video, I teach you the formula. It's real simple. Second one, I show you how to plot these on your chart, because most chart services will do it. What they don't do with it is teach you how to use momentum with it, and that's where I come in. I'll give you my ideas on how you do that, and you work with it for both the oversold, overbought ways, and where I think the pros will be playing with it. If you haven't tried this, I would give it a try. It's another tool. Give us a call. Go to our website. You can get it right there. You'll see our carousel spinning around. Just choose whatever you'd like, or click right here. If you're watching me on YouTube, it'll take you there. I'm Ira Epstein. Have a good day. I'll see you tomorrow.